Economic Substance Regulation. As part of the UAE's commitment as a member of the OECD Inclusive Framework, and in response to an assessment of the UAE's tax framework by the European Union Code of Conduct Group on Business Taxation, the UAE introduced a resolution on the economic substance on April 30, 2019. The regulations requires UAE onshore and free zone companies and other business forms to carry out any of the 9 relevant activities. Out of this, in this video we will be discussing on holding company. What do we mean by a holding company business? A holding company business is defined under Article 1 of the regulations as a business. 1. Has as its primary function the acquisition and holding of shares or equitable interests in other companies. 2. Is a holding company in accordance with the law applicable to the licensee carrying out such activity. 3. Does not carry on any other commercial activity. The definition of holding company business is narrowed down to fit into holding company business, which defines as a licensee whose activity is restricted to carrying out a holding company business that derives its income from dividends and capital gains, is subject to reduced substance requirements. Such licensee shall only be required to meet the following requirement under ESR. 1. Ensure compliance with requirements to submit the relevant documents to relevant regulatory authorities. And 2. Maintaining adequate employee and premises for holding and managing the holding company business. For this purpose, regulatory authority means Ministry of Economy and Free Zone authorities. Special points to be considered. A UAE business that does not meet the narrow definition of a holding company business because it either A. carries on another activity, or B. owns other forms of investments or assets, for example, interest-bearing loans, may be required to meet the full or increased economic substance requirements, and, if the licensee involved is included in other relevant activity under ESR, it will be covered under relevant ESR activity. Core income generating activities. 1. All activities related to that business. 2. Income from other than dividends and capital gains, also known as equity interests. 3. Only those activities that generate income, which means all non-income generating activity provided by a holding company, will not be considered as core income generating activities. All support and other back-office functions will also not be considered as core income generating activities. For further clarification, let us look into a few examples. Example 1. Company A, only activity is holding equity interests such as dividend and capital gains in Company B, and Company A only income is income from equity. Thus, in this case, Company A is a holding company and narrow definition of ESR will be applicable. Example 2, let us look at another scenario. ABC Company holds 100% share in Company EFG, and also holds 100% of share along with an interest-bearing loan in Company PQR, as ABC Company also holds interest-bearing loans in PQR. ABC Company will not be considered as holding company and will be considered under other relevant activity in ESR. Example 3. Company A is carrying manufacturing of food products and also holds 100% of shares in Company B. As the company is into other business, it will be receiving income from manufacturing of food products, which doesn't meet the criteria of holding company having only earning from dividends and capital gains. Thus it will not fall under holding company in ESR. Also, the manufacturing of food products does not meet the definition of any of the other relevant activities. Thus Company A is not subject to the regulations. Need assistance or advice? Please contact RBS at 0501755867 or 0545692022 or 0565002963. Mail us at rbs@rbsaccounting.com or contact@rbsaccounting.com. Visit us on www.rbsaccounting.com. Thank you for watching.